There's the strategic Bitcoin reserve. There's the SEC pulling back on essentially every lawsuit. There's progress on stablecoin legislation. There's talk of market structure legislation. There was the White House crypto summit. These are game-changing positive developments that should put Bitcoin trading at $150,000 or $200,000 today. It's been suppressed because in the short term, this overhang of the economic uncertainty is weighing on the markets. I think if that is released, we're at new all-time highs quickly, and we're on our way to where I think we'll be at the end of the year, which is Bitcoin 200,000.
All eyes are on the Fed this week as we wait to hear how the central bank will respond to economic uncertainty and a potential recession. What happens to the price of Bitcoin if the Fed is ready to deploy stimulus? Well, our next guest said Bitcoin could more than double by the end of the year. Bitwise Chief Investment Officer Matt Hougan joins us to share his bull case and his bear case. Matt Hougan, welcome to Markets Daily.
Thanks for having me.
Of course. Well, first episode of the week, so I like to start here. What are you watching and what should we all be paying attention to this week?
Yeah, obviously the big story this week is the prospect for a recession, or to be more precise, how the government is going to respond to the prospect of a recession or a weakening economy. So everyone, including me, is parsing the words of whatever government secretary or executive is on TV talking about what's going on. I love it when we can focus specifically on crypto, and I think the story there is very strong. But right now, it's the economy stupid, and that's what people are paying attention to.
Well, let's talk about what people are saying on TV. We had Treasury Secretary Scott Bessent join NBC News' Meet the Press on Sunday, and he did not rule out the possibility of a recession. So really backing up with what you're saying, everyone is wondering if we are heading towards a recession. And Matt, I have to say, I've been talking to economists and analysts on the show for a really long time, and they've all been calling for a recession. And this has been happening far before this administration has taken office. Talk to me about the possibility of a recession actually happening and what that means and what that actually looks like. Because I hear people talking about recession. I don't think they actually know what that looks like practically.
That's right. I mean, I've said before that I think the government has outlawed recessions. I think what's interesting about this particular moment, because you're right, we've been crying recession for 10 years and it's never arrived. The reason it's never arrived is every time there's a little wrinkle in the economy, the government steps in with stimulus, with reduced rates, with other ways of monetary support. We've sort of become allergic to any economic pullback, which is a natural part of the economic cycle. I think the thing that has people freaked out right now is, at least from the outside, the Trump administration is saying, we're okay with a little bit of volatility. And so that monetary stimulus may not arrive in the way that it has since 2008. My core belief is that it will arrive. My core belief is that the government will blink, that we really are allergic to these economic pullbacks, that we're not set up anymore to withstand that kind of volatility. So I expect maybe even this week to see the government start to blink, maybe at Jerome Powell's press conference later in the week. But if they don't blink, if we're really going to sort of embrace this pullback, this cleansing pullback, then that'll be a challenge for the equity markets and a challenge short term for the crypto markets. I think we'll be okay long term, but I think that's the game that's being played right now.
Let's talk about the two different scenarios. So we have the Fed meeting on Wednesday. Everyone's going to be watching, like you said, for cues on the central bank's readiness to deploy stimulus. If it seems like stimulus is coming to save us from a recession, what do crypto markets look like? I know in the past, crypto markets have reacted nicely to stimulus and cheaper money. What are you expecting to happen?
Yeah, more than nicely is what I'm expecting to happen. The thing that's happened in crypto over the last, let's say, 6 weeks is there has been so much fundamentally positive news. And it's just been buried sort of in the background. We've caused ourselves to ignore it. There's the strategic Bitcoin reserve. There's the SEC pulling back on essentially every lawsuit. There's progress on stablecoin legislation. There's talk of market structure legislation. There was the White House crypto summit. These are game-changing positive developments that should put Bitcoin trading at $150,000 or $200,000 today. It's been suppressed because in the short term, this overhang of the economic uncertainty is weighing on the markets. I think if that is released, we're at new all-time highs quickly, and we're on our way to where I think we'll be at the end of the year, which is Bitcoin 200,000. So I think there's been this sort of suppression of really good news. If that suppression is removed, I think it's a coiled spring. So in that scenario, I think we do exceptionally well.
Is there anything else that needs to happen to get us to Bitcoin at 200K by the end of the year?
I don't think so. You have these three horsemen of insatiable demand for Bitcoin. You have the ETFs, which I continue to think will have strong net flows this year. You have companies. We saw MicroStrategy buying more Bitcoin. I think the number of companies buying Bitcoin is going to triple this year. I think the game theory is on. It's slower than people maybe want in this impatient crypto world, but I think countries around the world are going to be buying Bitcoin. So there is structurally more demand than supply in Bitcoin. I think all we need is to release this sort of economic gloom that's hanging over us. If we do that, I think it's straight to the races.
Okay, now if we get to Wednesday's meeting and it looks like it's still going to be rocky roads ahead, we're not going to see much relief from the government here in the United States, what happens?
Yeah, if it's sort of the tough parent, stiff upper lip thing. I think it's going to be more market uncertainty. You could see Bitcoin go back to, 72,000 to its previous all-time highs. I don't think there's downside really below that. I think there's a great deal of support right there. In the long term, this good news is not going to remain suppressed. In the long term, the good news will make its way into the market and we will eventually get to where we're going. But yeah, if government officials hold the line that they're okay with economic volatility, they're okay with a short-term significant pullback in the economy, that they're not going to come to the rescue with at least more relaxed monetary or fiscal policies, then I think, volatility, we're going to chop sideways. We're all going to be frustrated. And that's the game that we're playing. But again, for long-term investors, I'm not sure it matters. Bitcoin is going to get there eventually. Crypto assets more broadly are going to get there eventually. But whether it's like a very exciting spring or a very frustrating spring could depend on what's said, later this week.
All right, so your bull case is 200K by the end of the year. You've kind of hinted at what your bear case is, but do you have a number? Where do you see us going in terms of Bitcoin price if the latter happens?
In the negative scenario? Yeah. Look, I think we could chop sideways back to all-time highs. I think previous all-time highs when we were at like 72. We saw us trade there from about March through November. I think there's a reasonable amount of support there. I'd be surprised if we went much lower than that, but who knows? It depends on how stiff the government is in refusing to respond to this economic uncertainty. But again, I go back to this core point, which there's this structural mismatch between demand and supply. The Bitcoin network is only producing 165,000 Bitcoin per year. Last year, the ETFs bought 500,000. Even if they buy half of that this year, that's more than the new demand. So there is this structural imbalance that I think puts a floor on Bitcoin that's higher than many people sort of expect. I think institutions are still moving in, governments are moving in, corporations are moving in. So there is some space to the downside, but I'd be very surprised. And as a long-term investor, very excited if we had the opportunity to buy below that, because long-term, I think the story is in. There's just too much demand coming into the market. The asset is too small.
So it really is a buy the dip case then, is what I'm hearing.
Yeah, dip and rip, I think, is the story here. If we get negative news, I think it's a pullback, but I think there's so much good news that's been sort of stored as dried powder that eventually that will be released. Eventually, it can't be held down forever, right? We have to step back and remember that a year ago, we had Gary Gensler in a very challenging environment. And today we have a strategic Bitcoin reserve and probably market structure regulation. I don't think the market is priced in at all how different those two scenarios are. So yes, if it pulls back, I think it's dip and rip. And eventually we will get to where we're going. Just whether it'll be a frustrating spring or an exciting spring is probably the question in the market right now.
Friends, DeFi is having a moment. Uniswap Labs web app and wallet connect you to the excitement. Swapping and bridging are simple, low-cost, and lightning-fast across 13 chains, including Base, Arbitrum, and Unichain, the new Layer 2 network designed for DeFi. Thanks to deep liquidity on Uniswap Protocols, you get minimal price impact on every trade, now with even greater efficiency through Uniswap v4. Swap, send, on-ramp, off-ramp, and bridge into a bright future. Get started at uniswap.org. I want to talk about your observations and feelings a second, because you said something interesting there that I think we skirt over in this industry because so much is happening all the time. But a year ago, we were sitting in a very, very different environment when it comes to the crypto space. Did you think we would be here a year later? I mean, as someone who's so involved in the space, involved in watching, involved in investing, talk to me about that rapid pace. It's kind of crazy.
No, it's totally crazy. Absolutely not. I sort of envisioned that it could get better from what it was. Maybe we could get from sort of a 50-mile-an-hour tailwind to still air, right? Neutral. I really didn't even in my wildest imaginations think that we went from that to, a full gale force tailwind pushing us forward, right? It's really hard to imagine. I mean, a strategic Bitcoin reserve, saying those words before August of last year would get you laughed out of polite company. No one would take you seriously. There's no way the US government's going to hold Bitcoin on its balance sheet until the Bitcoin conference of last year, where that sort of started to enter polite conversation. And now we've gotten that and more. I mean, we have a crypto czar. We have Paul Atkins maybe coming into the SEC, who worked in the crypto market as a lobbyist. It's an unbelievable positive trend. And I think the market hasn't accepted it. They haven't realized how big a deal it is, and eventually they will.
I want to talk a little bit more about Bitcoin before I let you go. Gold really outperforming Bitcoin in the current economic climate. What do you think that means for this narrative as Bitcoin, as digital gold? It's really being treated as a risk asset right now. Talk to me about the Bitcoin narrative. Do you think it's changing and shifting, or is this just something that's happening because of the broader economic environment?
Yeah, no, I think gold is telling you everything about where the market goes. Right. So the thing about Bitcoin, which is really challenging for people to accept, is it's a risk on asset in the short term, and it's this hedge in the long term. If you look at how Bitcoin has historically responded to market pullbacks, on days when the S&P 500 is down 2% or more, Bitcoin on average falls more than the S&P 500. It falls about 2.6%. But if you hold it for a year after that, on average, it's up 190%. Again, it pulls back in the short term because it reacts to these risk on or risk off conditions. But over the long term, its story prevails. What gold is telling you right now is that the world's demand for a store of value asset outside of the fiat system is bigger than it's ever been before. Bitcoin will eventually get its share of that market. So as gold expands the size of the store of value market, for me, the price target for Bitcoin gets higher, right? We talk about Bitcoin matching gold. A few years ago, that meant $800,000 Bitcoin. Now it means $1.1 million Bitcoin. So let Bitcoin lead. I mean, let gold lead the way in the short term. Fine, it's a safe asset. But what it's telling you long term is Bitcoin is an even bigger deal than you thought it was. And it's going to eventually catch up to that reality.
Matt, I know I said I was going to let you go, but I have to ask you about Ether. We hardly ever talk about Ether anymore. I correct me if I'm wrong, but I think the last time I looked, Ether was down over 50% on the year. And I want to ask you about it because I had a guest on the show months back now that said Ether is going to turn out to be the BlackBerry of the crypto industry. And I want to get your thoughts there. What's going to happen to Ether? What are you watching? Are we going to see it rebound? Are we going to see this ecosystem pick up steam again? Or are all of these competitors going to maybe wipe Ethereum out? And we'll be talking about some other cryptocurrency when it comes to the second largest crypto by market cap in the future.
Yeah, I mean, look, when I look at things outside of Bitcoin that people are excited about, what are they excited about? They're excited about stable coins. They're excited about tokenization. They're excited about agentic AI. If I look at who's the market leader in those three areas, Ethereum has the largest share of stablecoin issuance. It has by far the largest share in the tokenization market. It's the leader in the agentic AI space. If you just look at where the demand is bubbling up, it's still bubbling up on ETH and ETH layer 2s. I'm excited about a lot of the other alt layer 1s. If I were investing in this space, and I do, I would own a basket of them because you don't know who will win long term. But anyone writing off Ether is ignoring the fact that that's where the users still are in the things people think are going to be multi-trillion-dollar markets in the near term. I don't worry about ETH's ability to monetize them. I think one of the reasons that ETH has struggled is it sort of monetized too early. We got 1599 and we started talking about, revenue and volume and buybacks too early. It'd be like Facebook if it did ads 2 years after it was formed. It was too early. What I worry about are the things that are going to be multi-trillion-dollar markets being built at least in part on ETH. And when I look at those three things, ETH is the leader. So I think it will be fine long term. It could continue to struggle short term, but long term, that's where the users still are by and large in these real world economic entities that are going to be a big part of sort of our blockchain future. So I like ETH from here if you're holding for, the next 5 years. I don't know where it goes over the next 5 weeks.
Matt, it's always a pleasure having you on the show and hearing your insights. Thanks so much for joining us.
Thanks for having me.